Hi, it's Larry Gaines from Options on the Open. Just wanted to give you a quick update on the market. From what I'm seeing, using our price cycle trading model and doing a top-down market analysis, plus looking at the charts, which I'll go through in just a minute, it looks like that a Santa Claus rally is probably on the way. So first off, I like to go through the markets on a top-down basis, and to do that, I use our price cycle trading model, and I go through 5 different time frames to analyze where we are within the broad markets. So I will do this using the S&P 500 cash index, and I'll go through each time frame. And so first off, I go through the macro time frame, and using macro, I look at a monthly time frame. And currently, our cycle trading model still has a trend down, but it's very close to having the trend change. So that there's a potential for, even on the monthly cycle change, to the upside. So watching that closely. The long-term market trend based on a weekly time frame, our cycle model has the market currently, the trend still up. The medium-term market trend based on a daily time frame, our cycle trading model has the trend up. The intermediate term market trend using an hourly time frame has the trend up, but it's getting very toppy. So we could have a pullback based on that, but the trend is still up. The short-term trend based on a minute time frame, which we use for intraday shorter-term trades, our cycle trading model has the trend up, but also getting toppy. So going from macro, from the big picture down to the micro, basically the trend is up, and except for the macro, but that is very close to changing as well. So I'll keep you posted on the macro picture. So now let's just go through. We'll go through the SPY and the IWM, which is the Russell 2000, and the S&P, and I'll show you what those charts look like, and just from a chart standpoint. Now here's the SPY, which is the S&P 500 ETF, and what I've done here is there are 2 different Fibonacci levels that I want to show you. So here's the low from the October 4th to the high made in November, about the 28th. So when you do low to high, you can see the different Fibonacci retracement levels. So we had this high occur back in November, and then you can see where the market retraced. It came down, went back up, tried to break through the 200-day moving average, fell real hard, came down, and came all the way down and settled right here at 116.19. Then we had a move back up. So I took this low from here that came in around November the 28th, and that made a low about 116 in that range, and then from this low to the prior high, which was around December 7th or 8th, did another Fibonacci retracement levels, and you can see that the market retraced real hard, could not get through the 200-day, retraced, broke all the way back down, came to the 618 right here, and held. So if you look at the 618 right there, you can see that it's a very, very strong level where it held at right here, and it got a hard bounce. So yesterday, the Tuesday, the 20th, we had this major bounce off the lows, and then we came in today. This was a very, very strong bar. We came in, we opened, we moved down back to the lows, tested the 382 again, and then closed back above the 382 and actually broke this descending trend line. So it was a very powerful close today. So you could easily see the market respond higher, and the next level of resistance, it also held this 50-day moving average right here, which came in at 123.43. So it held that today, held the 382 all day long, closed higher, and closed with a solid green bar to the upside on the candle. So very strong close, very strong performance over the last 2 days, and also broke this descending trend line that we had coming in. So the next resistance comes in right here around the 236, right around $24, $25, or 124 to 125, and then the big resistance comes in at 126. So you could see an extension further tomorrow. So we have the employment numbers coming out, but we'll see how that goes. Now one more chart, the Russell 2000 IWM. Now again, this is a Russell 2000 IWM ETF. We had the low back here in October, high back in late November, and then we had this retracement all the way back down to the 618 where it held, and then we had this major move up, and it stalled out here. We had lower highs, so we had this descending trend line develop, and today we broke above that at the close. So you can see again it held a 382 for this move down, and then today broke above here. So this Russell 2000 can move quite fast, so it could easily get back up here to the 200-day and back up here to this to the prior highs. So watch the markets closely. Be ready for a move higher, and barring some major news out of Europe or something like that. Other than that, I think the markets are going to kind of grind higher here going into the end of the year. So good luck with your trading. And one last thing, a lot of the strategies we've been doing lately is selling options, because with the market has been kind of going sideways here. You can see it came down to 382, and it's been up here to this level. So we've been selling, way out of the money bull put credit spreads, and as it extends higher, we've been selling out of the money bear call credit spreads. So we've been, doing kind of strangles or iron condors and taking advantage of time decay of options. So good luck with your trading, and come join us at Options on the Open. That's optionsontheopen.com, and thank you for your time.